I'm Tara Joseph, looking at some of the key events in Asia in the week ahead with Andy Mukherjee of Breaking Views in Singapore. And Andy, let's start with Japan. The new year starting, fantastic equity performance at the end of last year, a new government, and Japan's CEOs get together. Are they going to be very optimistic now?
Well, they are going to be somewhat more optimistic than they were in 2012 because although the economy is still in a technical recession, the technical recession is likely to prove to be short and shallow. Also, the yen has already weakened about 12% in the final quarter of last year, and it's about 15% away from the critical 100 yen to the dollar mark. 100 yen to the dollar is really going to make automakers and electronics exporters of Japan happy.
So maybe they'll all get together and chant 100 yen together. Meanwhile, let's move on to China trade. We've had this fantastic array of China data pointing to recovery and excellent performance in the economy. But are the trade figures going to show a different picture?
Well, the November export data was really a big disappointment because 2.9% export growth is not what the market was expecting. The market was expecting much more than that. But then let's keep in mind that some of that was probably also due to the restocking of the smartphone market ahead of the holiday season sales coming to an end. Now, unfortunately, we are not going to have too many reliable data points until the Chinese New Year holiday period is out of the way to really get a grip on how Chinese exports are doing. But global growth is likely to be better than last year, and South Korean government has already given an indication that they are expecting their exports to be better than last year. So I think after March or after April, we are going to see a steady improvement in Chinese trade data as well. Although, as you rightly said, the optimism in China is currently all about property investments coming back in a big way, and of consumers also playing a supportive role in a growth recovery.
Still, you sound pretty optimistic there in terms of trade picking up around the region. Let's wind up with Indonesia, the biggest economy in Southeast Asia, a slew of data coming out. Things as happy down there as they are up north?
Well, it might be a mistake to look at monthly data such as motorbike sales in Indonesia to form an opinion about the real investment.
There are a lot of motorbikes in Indonesia. I think we can all attest to that.
That's right, and there will be many more this year because the consumer economy in Indonesia is doing well. But what is important from an investor perspective is what is going to happen to the subsidy picture in Indonesia, because let's remember that by the second half of this year, the country will be in the grips of an election fever. Elections for the next president will be held sometime in 2014. So will the current administration have the courage to actually deal with the subsidy situation, because the subsidies on fuel especially are so high, because Indonesia, in order to keep fuel the cheapest in Asia for its motorists, is actually underspending on education and health, which are actually key to its longer-term productivity growth. And therefore, investors would like to see a decisive move from the Indonesian government on the subsidy issue. And if they get it, they will be very happy about Indonesia.
As you've alluded to before, it sounds like politics, a very interesting thing to watch in Southeast Asia this year. Andy Mukherjee, thanks very much for joining us.